Welcome to America's Commercial Real Estate Show, your source for market intel, forecasts, and strategies. Hello, I'm Michael Bull. Thank you for being with us. This segment is brought to you by CommercialAgentsSuccess.com. It is crazy good training, sales meeting gold if you run a commercial real estate brokerage shop anywhere in the world. Check it out at CommercialAgentsSuccess.com. Well, today we have a show that I'm very excited about because we're going to talk about, I think it's, in my mind, the sector that's kind of most in question these days, right? Everybody knows it's the office sector. A lot of people working from home and hybrid. We still have a lot of the tenants that employees are not coming in. Maybe half of them or so are actually reporting to the office. It is starting to change, and some people are getting back. What does it mean for the performance of the office market now and in the future? What's it mean for cap rates? We also have other things going on in the world, right, with higher interest rates and inflation. So let's get a look at the office market. Please welcome my guest. It's Doug Ressler. He's Manager of Business Intelligence with CommercialEdge. Doug, good to see you, sir.
Thank you, Michael. It's always a privilege.
Let's start off, if you will, with absorption and performance. I think from folks on the outside looking in, they would figure that the office performance is really dropping.
The office performance is such that absorption, again, is negative this month, dropped about 8 percentage points. And sales transactions year to date, about the same as 2021 in terms of 44 billion. We expect 2022 will come in roughly equivalent to 2021 in terms of sales transactions.
You know, some people might find that surprising, right, Doug, that people are still buying and selling office properties at a time when maybe they think there should be a pause?
Yeah, we've seen that. We've also seen people migrate into different types of office, like life science, boutique offices, suburban offices, things like that, medical office buildings. So what people are looking for is where the demand is and where the greatest demand is, and they're looking to reevaluate their assets.
Yeah, and to that point, Doug, you know, what do you see for variances on performance as far as geographically or in certain cities?
Well, you know, it's interesting because our data shows the gateway cities, people are migrating away from gateway cities for life science into non-gateway type of life science cities. Everybody really doesn't have a lot of good things to say about San Francisco, but when you look at what's under construction right now for total, San Francisco life sciences takes up almost half of what's under construction for the office market this year. So there is positive things, especially San Mateo, Redwood City, things like that, places like that, life science buildings. You also have conversions where people are converting buildings into other asset types. And you also have the great co-working experiment that's going on. Yardimatrix has Cube, KUBE, which is a co-working software program that allows property managers to be able to maximize occupancy within buildings that are vacant.
Yeah, that's great. And when you look at this volume of sales really sort of being equal to what we saw last year, are you seeing differences in cap rates or prices per square foot?
Not really. It's about the same. So far, the bid and ask are pretty close. And I think there's hesitancy on people's part to put assets on the market if the bid and ask gap is too different.
Yeah, we just put a portfolio on the market in a really good southeast city that has 3% vacancy, and I'm really curious to see where the bids come in because of kind of the outlook for office right now. What do you expect moving forward for cap rates, if you will? I guess is the best way to talk about it in the office investment market with these interest rates climbing.
Well, I think they're under distress to be able to move down, and in terms of cap rates. And I think that you'll see that occur. And I think that, it's still a question of whether or not we've had a paradigm shift with the office market per se. Is it going to return to some semblance of normal pre-pandemic, or is the work from home going to continue as the du jour type of work method? And that question still hangs out there in the balance, and a lot of people don't know how to answer it yet. And, I don't have a crystal ball on it exactly.
Yeah, yeah. Well, I enjoy selling office buildings, and one of the things that we see is some of the smaller tenants, fully back in the office, and some of the bigger companies more struggling to get people back. And Elon Musk at Tesla, right, said, "Hey, get back in the office or get gone." Um, might the office market adjust when the employment market adjusts? I mean, it might be hard for you to tell your million employees to get back in the office when they can go get a job next door, right?
Yeah, you bring up a good point. And just recently, BLS, and I think it was, they did it in conjunction, but salary and wage for people that left and went to new jobs, there was a 60% increase in their wage. And so the new market is such that people aren't necessarily tied to a job. That, like you point out, the job market, is open for business. And even with this recession that's forthcoming or things like that, it's kind of unique in that employment hasn't really slowed down. And so people know they can get a job, and all probability can get jobs with higher income. They feel enfranchised, and that's going to put pressure on people that want people back in the office. That says you have to be here or get gone, to that quote. People say fine. And especially a certain type of demographic cohort is prone to do that, the younger workers.
Yeah. And Doug, what are some of the cities around the U.S. that um, are doing really well and are expected to do well?
Well, certainly I like Atlanta because, they have that new huge development that's going in the northwest part of town. And I think that the southeast cities, especially the ones within the new supply chains like Charlotte, Savannah, places like that, are really doing well because they're really adapting to the new um, pandemic paradigm. And so when you see a knowledge economy, those economies that are moving into the new type of digital technology, knowledge-based type of an economy, those are the cities that are doing well. Charlotte, Atlanta, Dallas, Phoenix, etc.
And Doug, are you seeing any adjustments so far? I mean, here we are, what, two years past or since COVID, I guess, started. Um, are you seeing any adjustment in new supply yet in the office world?
Well, right now the new supply is down, and what you see is people that are exploring options where they don't have to go shovel in the dirt, that they can do conversions. We're seeing more and more conversions, especially of C-type buildings, 20 years old, at least, if not more, that are in different places that people don't believe that those offices will be repopulated the same way. And they're looking to either do co-working type of mods, or they're looking to be able to put them into a different type of asset class, housing possibly, life science, data centers, things like that.
Yeah, it's interesting. I think if you look at a correlation between the office market today and the residential market after the Great Recession, where we had the housing bubble, everybody's, oh, no one wants to own a house anymore, it's terrible. And you look at the increase in values of homes over that time, and my estimation, we could be in that situation here with office where some people are questioning whether you need it. And then when the employment market changes and some of these companies realize that how much the turnover and having so many folks working from home or wherever is hurting the bottom lines and top lines. I think we'll have a window here of opportunity really for investors, whether they're converting it to a different use or upgrading it. When you look at the sales, what are you seeing difference from Class A buildings? Is there really a lot more demand for those than the B and C right now?
Trophies certainly have a lot more. And even with trophies, what you see is the amenitization that's going on, whether you're in Seattle or whether you're in New York City. And plus, you're also adding mixed use. Mixed use gives a better return. Recently in New York City, an office building, 50 floors, I believe, they have now converted 10 of those into apartments, and the bottom floor is also going to have retail. So what you see is really a conversion of just one absolute type of building where you have mixed use. That's really one of the incentives right now that's going on to be able to accommodate not only housing in key areas, but also to diversify your portfolio in terms of one asset.
In New York, the city, how is the office market in New York today?
The trophies are doing well downtown. The B's and C's are struggling a little bit, especially Hudson Yards is doing conversions in terms of some different types of asset, e-commerce, fulfillment, things like that, that typically they hadn't expected to do. So the buildings that were retail struggling. Recently, I see that Google has gone back in, or Walt Disney has gone back into Times Square. So that's a positive sign. Will it come back? It's a longer term issue. It's not going to occur by the end of the year or anything like that. But the digital technology for trophy offices in New York is great. And what they're doing is also expanding that. They're not sitting on their laurels. They're expanding their assets to be able to accommodate and diversify with newer technologies, monetization, things like that. The B's and C's are heartily looked at in terms of reclassification or, the adaptive reuse.
And Doug, when you look at the environment in the central business districts of these large cities, how much of the space, buildings in these central business districts is really comprised of office?
The normal number is 71% of business districts, urban cores are office buildings. That's the normal in the nation. And then when you look at Chicago and DC, the number bumps to 90%.
Wow, and that would make you think if only half the tenants or employees are getting back into these spaces, that it would make a very desolate downtown area.
Absolutely. And I think that what you're seeing is that companies have proven that they're able to survive from work from home. And in many instances, they're actually profitable. And I think that's one of the things that enfranchises workers, but at the same time, it also, gives hope in asset classes. It says maybe I don't have to return to the original paradigm that was before the pre-pandemic. Maybe I can adjust my strategies accordingly.
And Doug, when you study the office market today and looking forward, is anything kind of jump out to you that maybe surprised you?
Well, I think what's occurring in terms of adaptive reuse to me is one of and the speed at which it's occurring is really one of the things that I find um, very exciting. And before it was kind of lackluster. It occurred, but people are really adapting and looking at it to incorporate it into their strategy. And they're also looking at these boutique office spaces, and they're also looking at ways to create co-working. If you have an asset, you know, um, how can I keep it filled? And how best to do that. And co-working has really come on board. I know for a while there last year, because of one particular company, it got a lot of bad press, but it's really coming on board, and people really see that that's what it's going to. Also, one of the things that's being bandied about, and this is out on the edge, is the fact that do I have to keep the same lease duration that I've had in the past? That's being looked at. Can I shorten my lease duration? Can I change my lease, uh, you know, charging accordingly? Can I ask for a shorter time window where I put, my charges in and keep my lease duration shorter?
Yeah, and Doug, is some of that because they want to have flexible use in future in their office space, or some of it from kind of the new accounting rules, or maybe a combination?
Combination, really. FASB seems to be going along with it, and so nobody's pushing back on it. So I think you're seeing very creative solution in terms of asset owners and developers to be able to accommodate that.
Yeah. It seems like a very good opportunity here, a window, if you will, for office users to upgrade their space or maybe acquire space. And I know some companies are out there, kind of gobbling up space and acquiring space. What do you think about the moving forward? Do you feel like there's opportunities for users, or what do you think?
Absolutely. I mean, everybody wants to. I mean, you've read the press in the last couple of weeks about Amazon putting the brakes on their warehouses and things like that, but they're not really divesting themselves of those properties. They're really going for the long term. And so when I see that, as long as you can buy low and sell high, I think that people are on the right track to be able to hold a good asset in a good location based off their investment strategy, and they should stick with it. And I think that when you can do that and you can add to your portfolio, you should really look at it in that manner. The return on investment to do adaptive research, adaptive reuse needs to pencil out, but at the same time, if your strategy fits with your business, then you should do it. And I think that a lot of people are doing that. Again, Amazon hasn't gotten rid of any of those buildings that they've acquired. They're playing the long game. Will they release them out? There's been rumors that they're going to do that, and I'm sure they're going to make a profit on it.
Yeah, it's interesting. I've been in this business for a little over 30 years, and I've certainly seen companies where they called me to sell their buildings, and they were like, we kind of went in kicking and screaming. We didn't really want to invest in real estate, but ended up being a windfall, right? Time flies, and then all of a sudden your building has a lot of equity.
Yeah, and let's face it, the U.S. is a very secure type of investment. The commercial real estate market is not the cause of any kind of economic downturns. In fact, it's going to prosper very well and make it through. And so if you're looking for an investment vehicle, commercial real estate is really where you ought to be looking at with a low risk type of probability.
Yeah, and to that end, Doug, do you feel that foreign investment in U.S. office properties will continue, and what do you think we'll see there?
Absolutely. What we're seeing, I mean, still the primary international investor right now is really the Canadian market, but you've seen the meltdown that's occurring in China. There's an awful lot of money there. The European market is such that I don't need to tell anybody about the euro versus the dollar. So we're an investment, you know, hedge over here. We have good investment. It's secure. The rules, the accounting rules, the structure, the infrastructure that's here in place is really good. And I think that what you'll see is more of the Middle Eastern countries uh, looking at not only the office market but also the residential market in the U.S. And you'll start seeing a lot more international investments coming to the U.S. because of the low risk, high probability of return.
Yeah, it makes sense. Well, Doug, what would you leave our audience with to think about for the office sector moving forward?
Well, I think that the office sector is, still there's a lot written about what's going to happen. No one really knows the full, but I think what you're seeing is existing owners and asset developers right now really are being creative. They're really taking into account on a day-by-day basis and letting the market dictate what their strategies are and how they should change those strategies. They're not sitting on saying, I'm going to stick with my strategy the way it was 3 years ago and I'm never going to change it. So I think what you're seeing is a lot of people that are very creative in the business that are doing things that are very good for the commercial real estate industry, and they're making innovation happen based off the changing variables in demand.
Yeah, I agree. I think it's going to be a healthier office market. It's going to be a more inviting office environment. And if anything comes good out of this COVID thing, it's that, right? A healthier environment, more welcome environment, more productive environment. Doug, thank you for joining us, sir. We appreciate it.
Thank you, Michael.
All right. And thank you for joining us around the country. If you'd like more information from Doug and the good folks at Commercial Edge, their website is CommercialEdge.com. Thank you for joining us. And until next week, be sure that you always lead, learn, and laugh. And join us for America's Commercial Real Estate Show. America's Commercial Real Estate Show is brought to you by Buxton. Take leasing, site selection, and due diligence to the next level. Make the right decisions with on-demand mobile data. Visit buxtonco.com. By Bull Realty. For proven commercial real estate asset and occupancy solutions, contact me. My email is michael@bullrealty.com. By Commercial Agent Success. Expert-level commercial real estate broker training. Cloud Access 1, up to 21 one-hour videos. Visit CommercialAgentSuccess.com. Thank you for reviewing, subscribing, and sharing America's Commercial Real Estate Show.